Hello, everybody. This is the gold forecast for week commencing the 3rd of August to the 7th of August. So that's week commencing the 3rd of August to the 7th of August. Right. Okay. So the summary of what's going on for gold. So I am on gold futures. Sometimes I use the Forex chart, but it's the same thing. The summary is we haven't really done anything in the last 3 to 4 weeks. We have been plateauing. So plateauing means churning or seek and destroy or consolidation. As you can see, I'm on the daily chart and we are just going sideways. Now, we are going sideways, bouncing off the auction level. I have removed all the other auction levels on the chart just to make it cleaner. I've left the auction level above us. So this is the closest one to us. Closest major one above us in red at 4,420, 450, I'll give or take. And then just below us, we have the 3,900. I've adjusted them from last week, 3,900 and 3,800-ish, right? So we've got two of them quite close to each other. And the idea is very simple. Price is simply moving from one auction level to the next. Now, don't worry if all of this makes no sense. Okay, so if this is the first video you're actually seeing on the channel, I think this is video number 13 or 14, 13 probably. And so if something doesn't really make sense, you can watch those videos. However, you don't really need to. You just need this one video. So again, don't worry, I will explain everything. But first, let me just say my mantra hasn't changed from, I don't know, 3 weeks ago. So I've already mentioned the targets below us. So when I say below us, I mean based on the current price today. So today is Friday. So recording this on Friday. I try and do it on Friday just to give you time to watch it on the weekend. So right now, this is the Friday action on a daily. So anything above us, price is going to be moving towards the auction level. And again, anything below us, moving towards an auction level. We are just sitting on top. So this box right here is an auction level. And as you can see, we are just plateauing off that level. So next week, it's kind of, I've gone into a more neutral stance because we are plateauing. Now, normally what happens is when price is below the SMA, so I'm just going to switch that on. So this thick red line, then I'm generally bearish that because price is below that. And when price is above it, I am bullish. However, when price is churning or plateauing or just kind of straddling the moving average, I go to a neutral stance. Okay, so I want to see convincing action either above that line or below that line. Okay, right now we're doing neither. So I'm neutral. So effectively, we're just waiting for price to break out. Okay, so either break lower or potentially break higher. So there's this level here, which if we can get above it, we're probably going to this auction level. And then if we can get below this, then we're just going to the next one. So overall, my target for 2026 still remains the same. So I'm just gonna squash up the chart. It's 3,500 right here. And this is just a fib level. Okay, it's just an extension from this high to this low, extended from this high all the way down. That is the 161 fib extension. Okay, it's just a fib extension. That level also overlaps with the auction level. So that's pretty much it for next week, right? We just sit, we wait for the breakout. And only after the breakout do you start to think about when the trade is going to happen. So let me just explain everything, right? Let me explain just in case this is the first time you are watching this video. So as traders, or as a trader, there are two fundamental things I'm trying to do. or trying to answer. The first is, where does a trade take place? So think of this as location. Where does a trade take place? The second problem I'm trying to solve after location is, when does the trade take place? And that's to do more with your model or timing, etc. So supply and demand, ICT, VSA, all of that fun stuff, okay? This is where you start to understand the real context. Right, so that's the two problems I'm trying to solve. However, in order to even start solving the first one, which is what I focus on, so I only focus on the first problem in this video. So the gold forecasts are just designed to talk about location. But you do need one thing, and that's a bias. So for me, very simply, I don't want to complicate this. My bias is based off the daily. If price is below the moving average, which is this thick red line, I am bearish. If price is above it, then I am bullish. That's it. Okay, that's as simple as that. What does that mean in practice? That means that first let me explain these auction levels. Just let me explain this for a second. You see, in the olden days, what I used to do is I will draw a line on the chart based on touch points. Okay, so just price touch points. The more points I have, the stronger the line, right? And I'll just do this manually. Now I do this automatically, right? So I have an indicator. This is in-house. This is not for public use. I'll show it to you real quick. It's a bit messy, but it's called AMM. It's auction level, and it's these gray lines, okay? Now, what I've observed over time is that over years is price is just going from one auction level to the next. So it works like a PD array. I'm not saying it is a PD array. I'm saying it's like a PD array. Price just goes from, price moves down here, taps this auction level, goes back up. Where's it going to? This auction level. Comes back down. Where's it going? This auction level. Then it goes back up. Where does it tap? This auction level. Comes back down. Where does it end up finally? This auction level. There's actually two levels here. So I've just used this one box to represent those two because they're quite close. And you get it, right? Price is just moving from one auction level to the next. So let me take this off. Now, auction levels are they'll have no directional bias. So they're not bullish, they're not bearish by themselves. This is where you have to add your, your context or your models, etc. But that's a separate mindset. So first, my brain, all it does is it identifies a location. Then, and only then, do I then move to when the trade takes place. Okay, so that's when I really start to move to the nitty gritty. I go a little bit down, lower to a lower time frame, then I start to look for entries. So I take my entries at the auction levels. So I enter trades at auction levels and I exit trades at auction levels. Right now, I'm not in a trade. I've not been in the trade for the last 3 weeks or so. The last one I entered was right around here. There is an auction level here. And then this basically took me out for break even and price ran back up. So I'm out. All I'm just waiting for now is a breakout of this. Clearly, we are forming this uh, area, this zone right here. So again, entries, auction levels, exits, auction levels. That's it. It's as simple as that. Now, price only does three things at auction levels. It's going to either reverse, which is what I expect or I'm looking forward to. So for example, if I'm bearish, then I'm looking for price to go up into an auction level above it for me to take an entry. If I'm bullish, it's the reverse. I'm looking for price to go down into an auction level for me to then take an entry. Okay, so I don't take an entry in between. It must go up if I'm bearish or go down if I'm bullish. And all of this is based on the daily. I move to a lower time frame, any time frame, anyone you like, but the minimum is an hour. So an hour, 2 hours, 4 hours, 6 hours, whatever you like, whatever you're comfortable with, to then find your entry. That is pretty much it. So reversal, continuation. So this is where price may, for instance, is going down. It will stop for a little bit and then continue. And there is plateauing, which is what you see right here, where price just churns or consolidates or does like a small little retracement that doesn't makes no sense. It's just doing a bunch of nothing. Okay, it's just doing a bunch of nothing, resting, building orders, and that's it. Okay, so those are the only three things it does. Obviously, when price can ignore an auction level, it can just run through it. It doesn't stop, it doesn't break, it will just run through it. But I don't really count that as an action because it's not really interacting with the auction levels. Now, auction levels are finally very powerful. Um, I was looking at pound yen. I think we've broken out of it right now, but pound yen was stuck at an auction level that it created 10 years ago, right? This is basically how strong these levels are. So they don't go away. Once they're created, they're always there. All right, price will always react to it at some point. So sometimes it might run through them, but doesn't mean when it comes back, it's not going to react to it. Okay. So as a trader, what I just simply do is specifically I'm expecting reversals. In other words, price goes into the auction level and immediately you get a very, for example, right here, very quick V shape away from that auction level. You can see this level, this red line, that's an auction level. Price went into it, V-shaped out. This is how you want to catch your trades on a lower time frame. But that's an auction level. So this red line right now is above us. So if you are bullish, that's the next major auction level. Now, there are small little auction levels in between, but like I said, um, price, you're looking for an interaction. So you always focus on the next auction level and always assume that auction level will hold. If it doesn't hold, then you'll see price will just break through it, or it will start to churn like this, and then you just give up on trade and just not do anything. So remember, everything is driven by your bias. If you are bearish, you're not taking bullish trades. It doesn't matter what happens, you simply don't take a bullish trade. If you're bullish, you do not take bearish trade. Doesn't matter what happens, you do not take a bearish trade. Okay, so that's it in a nutshell. Hopefully you got some insights. Thank you very much for watching, and I'll see you in the next video.